Welcome to this month's Cryptonite. I am Sham and I have Dr. Tejasvi with me. So, Dr. Tejasvi, please get us started on the goings on in Bitcoin. I think this month's biggest news is the ETF approval. So, how is the mood amongst the Bitcoin enthusiasts regarding that?
Uh, yeah, it's been an interesting week, I would say. Actually, it's funny because I don't know whether you've been following the news. Uh, on the day before the ETFs were actually approved by the SEC in the US, the SEC's Twitter account got hacked, and the hacker wrote on the Twitter account that the SEC has approved the ETFs, and there was a huge climb in the price. And then the SEC wrote that it was hacked because they did not have two-factor authentication, blah blah blah. Essentially, they basically manipulated the market for I don't know whose benefit. But anyway, that was a bit of a digression. But eventually, the next day, it was actually approved, which is interesting because January 9th was the day the first block of Bitcoin was mined in 2009, and it's been 15 years. And exactly on the same day, or maybe one day later, the ETFs are approved. Now, of course, these ETFs are spot ETFs, and when I say spot ETFs, what I mean is the corresponding amount of the ETF's value is held by a custodian on behalf of you, right, in some sense. So I think around 10 ETFs were approved. All of them are giving remarkably low fees. So, for example, the Bitwise BitB ETF is priced at, I think, 12 or 14 basis points, which is very cheap. Even, for example, GLD, which is the biggest gold ETF, is priced at around, I think, 0.4% or 40 basis points. So 12 basis points or even 20 basis points is very cheap for a ETF, especially an ETF which is exotic, so to speak. So that was an interesting move, and all of them have slashed their price. So you have Valkyrie, WisdomTree, Fidelity, BlackRock with iShares, VanEck, Invesco, all the big names are here, except of course for Vanguard. Vanguard is the second biggest ETF provider in the world, and they are missing. And they also apparently made some statements saying that they will not apply for an ETF in Bitcoin, and also they will not allow you to buy a Bitcoin ETF of other providers through their platform, which was, I don't know, some sort of a ESG-like statement they are making, or they might be influenced by Senator Elizabeth Warren. It's possible. I'm not sure. So anyway, Vanguard is, I would say, conspicuous in its absence. But otherwise, the ETFs are approved. Tons of inflow. I think around approximately a billion, maybe not $1 billion, but I would say around $800 million of inflow has happened. Notably to BitB, which is one of the bigger ones, the Bitwise one. What's funny or what's interesting is they even said that out of their profits, they're going to donate 10% of their profits to the Bitcoin development fund. So what they will do is they will basically.
Which one is this?
So they will. There is a bunch of open source collectives. So they basically give grants to open source developers. These grants are not very big. They are like maybe $5,000, $10,000, $20,000. They are not like a salary, but they're more like you're working on a project, we like it, we just pay you. There is no like deliverable. It's more like a charity in some sense. So there are many such organizations. There's the Human Rights Foundation, which also does Bitcoin development. There's the Brink Bitcoin Development Shop or whatever. There are like around 4 of them. They're all headed by thought leaders, for the lack of a better word. And these guys tend to seek out developers and give them money. Again, the values are not very high, so I would say the incentives are not completely messed up here. And VanEck and Bitwise have said that they will donate 10% or 5% of their profits to these funds. I think it's a nice gesture. It's not going to change anything significant, but it's a nice gesture. The one interesting development also here is there used to be a product called the Grayscale Bitcoin Trust, which was like a trust where you could buy their shares, and they would buy Bitcoin for you, but there was a lock-in period of 6 months, and the fees was 2%. And 2% is a remarkably high fee for custodying Bitcoin, which needs no work really. You just need to keep one piece of information secret, really. So that also got converted to an ETF. But if you sell that ETF now, you will have a huge tax event. So most people are not selling it. But a lot of people are still selling it. And that's the only ETF out of which there is outflow on day one, because people are rotating to the other cheaper ETFs from 2% to like 12 basis points. which is a what 90% reduction of fees, something like that. But of course, this is all weird because Bitcoin is gyrating like between 40,000 and 49,000 or whatever. So the 2% fees seems completely ridiculous. But people are tuned to think about fees when they think about ETFs. So people are opting for cheap fees. But anyway, that's the story. 10 ETFs, all together getting around 800 million of inflows. More coming up maybe later. What's fascinating is buying Bitcoin through the ETF might be a cheaper option now than going through an exchange and buying Bitcoin yourself, which is surreal if you think about it. Maybe it's discounted, I'm not sure, or maybe the exchanges are fleecing you. Either way, it's a fascinating time that we live in. It's some notion of legitimacy coming back to the space, but at the same token, I heard that India has banned access to Binance, KuCoin, Kraken, and a bunch of exchanges day before yesterday. So what's up with that?
So before we get to India's unique take on this, right? So let's dial back to the ETF stuff. So a couple of observations from my end. So one is you mentioned grayscale, right? So if you were clipping 2% in fees, it feels like it's like an own goal, because grayscale is the one that sued SEC to get the ETF approvals fast track. So they spend all this money, and unfortunately, they are the ones who get impacted by the fee war now that is taking off. So it feels like a sort of a bizarre business decision, from where I sit, because if this was traditional finance, they would actually be suing SEC not to approve ETFs, not so that they can protect their fee stream. That is one thing. The second thing is fee wars in ETFs, are one thing, but how many of these jokers will be around 5 years from now is a big question, because specialty ETFs are nothing new, so they keep getting tried all the time. There was even a coal ETF. Okay, there was a lithium ETF. So all these things, that are like commodity specific, have a very short shelf life. So when that commodity is in the public consciousness for some reason, everybody wants to kind of like make hay when the sun shines, and after the interest wanes, it's poof, it's gone. So
No, but why would it go? Because what is the cost of holding an ETF on an exchange, right? Even if there is a waning interest, what is the opportunity cost? Like, why would they shut it down?
So for one thing, it is the current cost of compliance and maintaining the infrastructure of that ETF itself. And the second thing is growth prospects. So if you think that it has gone out of fashion and it's not going to come back up for the next, say, 5 years, then it makes no sense to hold it now. You might as well shut it down and then relaunch it 5 years from now. So they take a fairly level-headed call on these things. The ETF issuers particularly, but from an investor's point of view, you should almost never invest in the hot sector ETF or hot theme, because by then it is already kind of played out, and you're the exit liquidity, so to speak. So don't be the exit liquidity. But Bitcoin might work out differently, who knows. But ultimately the problem is, now you have taken the entire vision out of focus, right? So decentralized, blah blah blah. So now it's all back to centralized. BlackRock, for example, might be the one of the few big issuers who might still remain standing after the fee war. So for example, the S&P 500 ETF from iShares is like 3 beeps, right? So as assets ramp, they will reduce the fee, and it's very difficult for other people to compete. And promptly after the ETF got issued, Bitcoin crashed. So I don't know where it is trading now, but it was down like 5%. So yesterday. So it's a highly volatile asset. So I don't know how it fits into any sort of portfolio construction, because you want volatility of your entire portfolio to be low. But but when you add this 100 wall asset into the mix, you're going to see like some interesting fireworks. This definitely does not belong to the boomer portfolio, right? So it is definitely for people taking a punt. And I don't know how that's going to work out. And parallelly, what is happening is they are going to try and push for ETH and other ETFs. So and I feel that the treasury or who is on the other side of SEC want this to happen. Okay, so I think you can claim that if most of the money is affecting US investors, then they can basically export their laws to every other country, right? So they can say that it touches US dollars, and US dollars make up more than 30% of of whatever assets this is referencing. So our laws apply. So all the borderline criminal use cases of crypto will end up being monitored by the FBI and the NSA and so on. So the world over. So that whole initial sort of decentralized financial system that this was supposed to foster ends up again coming under the umbrella of the US. So that is something that would
So
be interesting to watch.
I am not sure about that. Let me tell you why I think that's not going to happen, or that's unlikely to happen. Is because in many commodities, the movement of commodities, the extraction, the mining, or whatever is the physical act required with a commodity, like lithium or copper or oil or whatever it is. Somehow it typically so happens that the US has a large interest in that particular commodity's physical goods as well. So that aspect is not the case with Bitcoin. Bitcoin does have a lot of US presence in terms of miners being in the US, in terms of holders being in the US, in terms of network activity, all of that being in the US. But commensurately, there is the equivalent amount of mining in Kazakhstan, China, Europe, South America, a bunch of other places, and there are holders everywhere. And a lot of holders are unknown. We don't even know who they are. And the fact that it is still cryptographically secure, it is still not changed. Like the ETF happened, and because of the ETF or for the ETF, no change happened. Everything kind of was exactly as they were before. So the ETF was a non-event in terms of technological shift or community shift. Of course, all the investors and people who are on the traditional side of things who want Bitcoin as an asset, they were all pumped about it. But the GitHub repository, nothing really changed. In the general discussion around how to scale Bitcoin or how Bitcoin helps privacy or whatever, nothing really changed. So I think it is possible that some influence will be there, because eventually if BlackRock custodies a million Bitcoin, which is out of 21 million, it's considerable, then they will have some say in how the asset is evolved. Like copper doesn't change. Copper is like copper. No matter how much copper you control, the marginal amount of copper that the other person has is still going to have all the properties of copper. But Bitcoin is not like that. If you change the rules of Bitcoin, my Bitcoin also gets affected. So my Bitcoin is not completely isolated from your Bitcoin. So they are kind of connected in this kind of network/computer science sense, right? So I'll give you one example. So let's say there is a discussion and eventually a rift in the way Bitcoin operates over the next, say, 10 years. Eventually, it will lead to what is called a fork. So some people will say that their rules of Bitcoin are different, and they will start following a different set of rules. Now, whatever side BlackRock picks will have a lot of cachet, because BlackRock will say that, hey, you know what? We like a Bitcoin which doesn't allow, say, anonymous addresses or whatever, which doesn't allow whatever. They will make up some rules, or somebody else makes it and BlackRock follows it. So that change of Bitcoin's nature can be affected by BlackRock. It's possible. So there is that fear is definitely there among some of the purists in the industry, where they say that if you have one holder who holds a lot of Bitcoin, then their notion of what Bitcoin is might make a difference. But in the previous time this happened, this thing did not happen actually. So the holders of most Bitcoin were not able to affect their change. They had to capitulate to the technologically advanced idea, whatever it was. But I'm still curious about this. So this is still work in progress. This is not decided. I think the concerns are valid. They are not scary, but they are valid. So I am still watching this space very closely because I am still worried that BlackRock or Fidelity can influence how it will play out.
Right. So I, for one, I'm excited about this. So I think once the prices stabilize, I might actually buy the BlackRock ETF. I've been holding off because, first of all, you keep hearing all these hacks and other nonsense. So I just didn't want to. I was pretty sure I will not be able to set up a decent wallet with all the security and stuff. And thankfully or not, India in its omnipotent decision making, they kind of booted crypto, under the radar, so to speak. So India is it kind of reflects the angst that most emerging markets have against this. So the biggest problem is, we have discussed this problem of dollarization before. So the RBI is dead set against Bitcoin or any coin. So they think crypto is a threat to our financial system, and I kind of agree partly with with their take.
No,
So
at least you see where they're coming from.
yeah, absolutely. And this SEBI is also dead set against it because they don't know what it is, right? Is it a security? Is it a commodity? And the same entity is custodying. It's also a broker. It's also a clearing agent. Like, what the hell is going on? So we don't encourage that, right? So, but the government is kind of ambivalent because they look at this as a tremendous revenue source. So because punters are going to trade, and if even if they put like a 0.5% sort of STT on all crypto and regulate the hell out of it, so that Indians can only play in the Indian crypto arena, right? And this gambling addiction is going to be like a huge source of revenue for them. So they are still trying to kind of stand on both stools at the same time. But at the same time, the enforcement angle is doing its own thing. So they absolutely hate the idea of non KYC transfer of money, flow of money, and this is actually goes back to the Hawala problem that we always had, right? And we continue to have. So so they're using the same sort of legal infrastructure that they have, enforcement infrastructure, to go after crypto guys. So the reason why Binance and all these guys got banned, so-called, is because they were not following any of the KYC or AML standards, and there are also reporting requirements. If money comes from India, right? So we have an LRS cap. So LRS is liberalized remittance scheme. So under which every Indian can transfer $150,000 outside of India every year. So there's a cap to it.
I thought it
So
was $1 million, no?
$150,000 a year.
Oh,
Okay.
wow.
So yeah, so this is for like all your portfolio investments and all that you do under your this thing has a cap. Now if you're a company and you want to go acquire something else, that's a different matter. But at an individual level, this is what it is. Now and RBI monitors that cap, right? So there are reporting requirements whenever you transfer funds to other to outside entities. Now if you just swipe your credit card, Indian credit card, and those guys deposit dollars into your account for you to play with, dollars or
Euros or
yeah,
whatever.
Binance, yeah so what they have, so the problem that these enforcement agencies have is that that is actually an LRS transaction, and that needs to be reported to the RBI, which cannot happen if you're just swiping your credit card, right?
Why the credit card issuer is also like an Indian bank, right? They could do that.
They could do that, but if this is for specifically for buying financial assets, it cannot be done on credit. Okay, so a credit card is a credit instrument, right? So you can't buy stocks using a credit card. So you need to have a proper margin account, which goes through KYC, and there's an NBFC attached
Oh,
to it who's monitoring all the stuff. So everything, so what these guys were doing is basically an end run around all these requirements and just taking the money. So that's a big no-no. So that's why you see tremendous pressure being put on. Like if you touch crypto, then audit is basically going to happen at one point or the other, right? So the IT guy is going to ask you, show me, right? Show me all your trades. Let's figure this out. And most of the time, the problem is that there's also a TCS requirement. So every trade has a tax deduction at source. So if Binance is not doing it, then it falls on your head. So you should be remitting that cash to the income tax department, and nobody here does that. Like who's going to be so diligent about it, right? So all these problems kind of have put a big stop
damper,
to all.
big damper.
Yeah, yeah. So that is fine. I mean, that is what it is. But the angle to this is, okay, so now let's say I am a Bitcoin enthusiast and I want to buy this BlackRock thing, right? So I'll just open an interactive brokers account, transfer money through LRS and buy this thing. That is fine. That is perfectly fine with the RBI. Okay, so RBI also has another rule saying you cannot use these Indian funds in a margin account in the US. Okay, it has to be a cash and carry account. They don't want you to play options in the US or futures and all that stuff. But they're perfectly fine if you buy a 2x or a 3x levered ETF.
Because the leverage happens on the ETF side.
Yeah, and you're giving the full money, right? So they can't claim your Indian assets. So similarly, the Bitcoin ETF is perfectly fine with the current rules and regulations. So that gives an avenue for boomers in India, guys like me who have been following this from a distance, and they just want a taste for it, because a 100 wall asset might look really bad for a US investor because S&P 500 has a freaking too sharp ratio, right? But but if you look at the Indian market, which has traditionally gyrated a lot, and we also have rupee depreciation and so many things going on here, that 100 wall asset may not look that bad for people who have been punting different things here. So you might see a fair amount of inflow come in from emerging markets like India as well.
And also because
Not just
the fees are so low that it is like it's almost unbelievable that the fees are so low. I was a bit shocked, by the way, that the fees raised to the bottom happened so quickly. Like I thought, they would all start at around 1% or 1.5%, and then kind of eventually maybe market it down. But on the opening day, it started at like 12 bips. I'm like, what is happening? It was a bit shocking to me.
right, and I think they don't have to spend in any physical infrastructure for this, right? So every other commodity need to hold it somewhere. So you got to pay for that warehousing and all that. So I'm kind of happy that they passed all these costs, down to investors or speculators. But I think the biggest problem that you mentioned, that it's actually cheaper to buy the ETF than go through a crypto exchange. That is true if you're an investor, but if you're going to trade it, then it's a 24-hour, 7 days a week, 365 days a year casino. So you'll go to sleep here with your Bitcoin ETF, thinking, oh, I made a lot of money today, and tomorrow you wake up and it's all vaporized because some whale puked the whole thing and you're done, right? So if you're punting this, then I would say stick to your casinos. But if you're just looking at an allocation to an exotic asset, then this works. And there are a fair amount of people who invest in all sorts of nonsense.
What is your
As long as it's on the
what is your egregious examples of all sorts of nonsense?
look, you know, uh, there was a time when advisors were legit pumping lithium ETFs, and I'm talking
Really,
not
really?
recently. Yeah. So there's this dude called Downtown Josh Brown.
Yeah, Downtown
who has
Brown.
a
Yeah, he's a part of the
yeah
Morgan
tremendous Twitter
Housel
following.
family. Yeah.
So he has a tremendous Twitter following, social media following, and all that. So and this was like a long time ago, like 6 years ago or something. So
Not when Tesla is hot.
yeah, so he goes on CNBC. So this was the first EV cycle, EV hype
Okay.
cycle. So he goes on CNBC and he's like, we are long this ETF, LIT, lithium, in our client accounts. And it was a decent pump. So so if you see the lithium, price chart, this thing is just shot through the moon. Nobody freaking read or looked at what is the asset of this lithium
Is it
ETF.
lithium
It is
miners?
not lithium metal. Okay, so it is some random companies in emerging markets in Congo, some shit. Okay, packed into a nice sounding ETF with a great handle, LIT was the symbol. Okay, so it hopefully he used this herding into it as an exit liquidity and got out of it for his clients. But a couple of I think a couple of years from now, the whole thing went away. So this was like the first EV thing, and they actually shut that ETF down. Okay, so like when I say nonsense, right, it's like this hype. So you need to absolutely be the insider of these hype cycles in order to kind of capitalize on it. The minute you hear it on Twitter or CNBC, you have to admit that the hype is done, right? And you're the exit liquidity. So if you go and buy it at that point, you're done. So even if you track the underlying assets of these lithium stuff, I mean, chances of you getting any money out of emerging markets miners, right, sitting in the US is close to zero. Okay, it has never happened in the past. So, you take any company, they get nationalized, or they're already semi-nationalized. Some nonsense or that keeps
And they're
happening. So,
corrupt. They're corrupt. There is no accounting requirements. It's all completely crazy.
yeah. So I would so like there are, but the thing is there are people who keep investing in these sort of ETFs, hoping to strike gold the next time or the next time or the next time. And it's a fairly big market, by the way. So it's the same people, but they already have enough funds in like stable investments, so they have the small play thing. So they just try to keep doing something. So they win some, they lose some, but overall it's negative EV. But
But they
whatever.
they they are a good demographic to get into the crypto space as well.
Yeah, absolutely. So they are the ones who should be looking at this because it gives you a lot of entertainment value as well. So you wake up and you are like, oh, I'm like going to retire, and you go to your boss, and just before you quit, you look at the price and it's like down 50. Like, nah, hi boss, I
Tomorrow,
love my
tomorrow,
job.
tomorrow. Let's talk tomorrow. So no, it's a so here's the interesting one, right? So for me, like I kind of fundamentally believe that Bitcoin is a force for the good and will change the world, and eventually will be a check on the central banks. And there is this philosophical belief, right? If you believe all of those things, then perhaps if you're in for the next 10 years or 15 years or 20 years, you don't really care about the short-term volatility, GPTC discount, or some other something completely micro event which is going to be relevant for the next month or so. Uh, I hope it will matter to those people as well. And I hope that these asset holders like BlackRock and all these guys who are in charge of the asset, they will pretty much be just a bookkeeper, and they will kind of move on to other things. And this will be like a remarkably boring spot product at a very cheap price, which is low maintenance, low budget, everything low, and just kind of hums along with no real news around its implementation or its actual existence, right? Of course, the underlying asset will do its thing, but the packaging should be as boring and as uninteresting as possible. That's my hope. We will see how it goes.
Yeah, absolutely. I'm rooting for it.
Okay. That's an interesting one from you there.
Um,
So
yeah, I mean, I just
speaking of
hope
which,
some BlackRock intern doesn't post the keys on
no, so
GitHub.
the thing is, I would say around 9 of the 10 ETFs are custodied by Coinbase. and one of them is in custody, is self-custody. So Fidelity, I think, has crypto custody already built in to their vault, and so they allow Bitcoin custody as a product for their high net worth individuals and a bunch of people. So they have a state-of-the-art custody facility already. When I say facility, I don't mean a facility, but like a computer system, right? And I think Fidelity is going with that, but the others are all using Coinbase, which is interesting because Coinbase is also like an interesting stock to track in this space, because they do have a lot of custody business. Like the rumor is that most of MicroStrategy's Bitcoin also is custodied by Coinbase. If that is the case, then they have a lot of Bitcoin themselves. They might have upwards of 1 million Bitcoin already themselves, which compares them with Satoshi and the other holders, right? I mean, Satoshi is probably the biggest holder, but I guess they're in the same league right now, Coinbase, maybe even more. So that's a interesting point.
Yeah, but the custody business doesn't make money, man. It's the transactions that make money. So, just holding it is like a flat fee affair.
No, but the costs are zero, right? That's the point. Once you build the technology, which is like not that hard, the costs are essentially zero. So you basically get something for nothing.
Yeah, but holding it, right, is an AUM business. So you might clip some small beeps, but the real money is in the transaction side of things. So even the custody, right, as Bitcoin goes in and out, there's a fee to it. So so that's where they will make the money. If everybody is just holding Bitcoin forever, then the custody business in itself is not that lucrative.
You mean from Coinbase's perspective?
Yeah. So anyway, good for them, but Coinbase has always been a bit kind of egregious with their fees and so on and so forth. So I kind of looked at the fee schedule and I'm like, wow, wouldn't I love to have something like this here?
Next upcoming ETFs?
Yeah, I hope Ethereum launches.
So there I have a bit of a hot take or a counter take in some sense. Maybe it's not as much of a counter take as I think it is. I think it'll be harder. Ethereum ETF will be harder because it was definitely not a fair launch, in the sense that the commodity was distributed in the beginning for insiders and to a bunch of other people. So there is the pre-sale, which is what they sold it at in the 2014, I think, or 2015. And then the fact that there are thought leaders in the Ethereum ecosystem who can change the way Ethereum evolves in a much more obvious way, rather than in Bitcoin. Also, it's possible that people will change Bitcoin, but the path is not very clear. In Ethereum, it's a bit more obvious, but that is again a subjective opinion. It's not easy to prove that. But the pre-sale is quite easy to prove. So then it becomes a bit tricky whether it qualifies as a commodity. Of course, SEC has many times said that Ethereum is a commodity, but some others have disagreed with them. So we'll see how it goes. The general consensus on the street is that it will happen in the second half of this year, or maybe even the beginning of summer. Summer as in summer US, which is around June or something, right? But I'm not sure. I'm not holding my breath. But it is definitely the appetite is very high.
Right. I mean, I hope it happens because at the end of the day, once you kind of have a foot in the door, right, a toehold, so to speak, they're going to bust open the door. So, after Ethereum, why not Solana? Why not something else? So, and
there it gets very complicated very quickly, right? Because so I had this kind of perspective about Bitcoin and Solana and Ethereum for a while, which is that like Bitcoin, of course, tries to be as decentralized, as cockroach-like as possible, without like compromising on its kind of core ideals, right? Solana doesn't really care. Solana wants to be as fast. They want to get as many transactions. They want to be the Nasdaq. They want to host Nasdaq on their platform. So they want to just move fast and possibly break things, but mostly move fast. Ethereum is kind of stuck in the middle, where it has some ethos in the Bitcoin side, where its origin story is tied to Bitcoin in some sense. It's kind of came from that lineage, and it has those ideals and ethos built in. But on the other side, it also has a full-fledged platform where you can code up smart contracts and do all sorts of financial magic. So it's kind of has its foot in both camps. And because it cannot do the same performance that Solana does, because it just cannot, because it's decentralized in a nicer way. The trade-off is very obvious in Ethereum. In Ethereum, both parties can see the trade-off. If you ask a Bitcoiner about Ethereum, he'll say it's too financial, too much of pre-sale shit happening, insiders, that the smart contract features make it vulnerable to all these attacks and blah blah blah, right? If you ask the Solana guys, they're like, Ethereum is too slow, there is not, this fees are too high, why are they so decentralized, it's inefficient, they don't paralyze their transactions, what the fuck is going on? So they're in the middle, kind of stuck in no man's land, with both ethos not working for them. And I believe that this will actually be their undoing. But this is a personal opinion. A lot of people think that that's their strength, that they can claim both. They can claim legitimacy from both sides. They can claim legitimacy of financial finance 2.0 or Web3 or whatever it is. And they also claim the legitimacy that they're saying the fuck you to the government, fuck you to the Reserve Bank or whatever it is. So they are both, right? So you can argue that same concept from both sides. And it's an interesting one. I think that's what will make the ETF very difficult, because the ETF has to be much more, the object of the ETF has to be more boring than Ethereum. Ethereum is too sexy and exciting to be an ETF. Bitcoin is kind of boring in that sense, right? It doesn't do much, and it doesn't change much. It does one thing and one thing very well. That's it. It's kind of boring. It's boomer technology, so to speak. So I'm curiously watching the space of the Ethereum ETF. We'll see how it goes. But again, once you go down Ethereum and then to Solana, Ripple, Cardano, whatever, then it becomes like a stock for sure. Like Cardano is definitely a security, right? In some sense. I mean, I haven't run a Cardano node ever. I don't know anybody who does it. I don't know whether it's truly beyond the control of the Cardano Foundation. Same with Solana as well. The Solana Foundation definitely does control a lot. It's not even the foundation. There's Solana Labs, which is the venture-funded company. And it has raised, I don't know, 350 million of venture capital. With that much of venture capital, it seems like a proper startup, right? So I don't know. So Solana becomes very complicated. Cardano, Solana, Avalanche, they're all complicated. Ethereum is kind of in the middle. So we'll see. I'm very curious about this.
Yeah. Well, we'll see. Speculators are going to speculate. So, so what is this about Jevon's paradox? I saw your tweet about that as well. So
yeah. So this is I think it's a very I mean, this is a bit of a philosophical digression. So let's bear with me here. So Jevon's paradox says that let's say you have a resource and it is not very efficient. So people are using it very inefficiently. So what you do is you make it more efficient in the hope that people use it faster and get away with it. Like, so there are 100 people using it. So they take 1 minute to use it. So it takes 100 minutes to use the resource, which is very inefficient. Let's say you make it faster. So now it's 30 seconds to use it. So you expect 100 people to get finished in 50 minutes and move their way, right? But it so happens that many assets or many resources, the more efficient you make it, the more demand comes in. So the demand never subsides in some sense. If you make it more efficient, it will again be taken over. So if you make it half the price to use, the demand goes up even more. So it's kind of this paradox, and it's relevant to Bitcoin because of a very interesting debate, which is Bitcoin has limited capacity. So it does around 7 transactions per second, or the 1 MB block per 10 minutes, or whatever you want, however you want to phrase it. Let's say you somehow make it better. You make it 2 MB, or you make it not physically 2 MB, but let's say you are able to cram more information into a single transaction. Or you do some other technological innovation to make it faster or cheaper or whatever, right? Then that whatever demand is there will actually grow. It's not like this demand will become cheaper to use. Like, it's not like the current transactions which are expensive will become cheaper and that's about it, right? More transactions will come in and more demand will happen, and the fees will still stay high. So the more you improve it, there's no commensurate benefit in terms of getting cheaper fees. So you take the cost of improvement, which is like, hard fork or soft fork or whatever the Bitcoin change procedure is, which is painful to say the very least. You take the cost of doing that, you take the hardest cost, and you get nothing from it, because the demand will keep high. So right now there is a bunch of so-called spam transactions on Bitcoin, which some people take. I mean, what is your spam is my email, right? So you can call it spam, but I call it email. So people disagree on what is spam. But some people say that this whole set of NFTs on Bitcoin are spam. And you say that, okay, you know what, they will be priced out because their value case is not that high and real use cases will take over. But then you see that happening and real use cases are getting priced out because they can't compete with the NFTs. You increase the space somehow available, there'll be more demand for NFTs then. You will never really solve the problem. So this is an interesting debate in the Bitcoin space, because some people argue against improvements by quoting the Jevon's paradox, saying that this is what will happen. So even if you improve it, you won't get anything from it. It will still have shitty use cases, which will always be there. So till the real use cases become independent of Bitcoin valuable, like for other reasons, then these things will never get priced out. The NFTs and the degen action or whatever it is, like whatever is the thing you call spam, that will never get priced out till you out of band in some other dimension, like independent of Bitcoin, the value of censorship resistant transaction goes up. Till that happens, if censorship resistant transactions have no demand, then there will be NFTs which will take over the space.
Yeah, you know what this reminds me of? It reminds me of electricity, right? So electricity also has the same paradox. So the more you supply it, you think you can drive price down to zero, but
The more
demand for
gadgets
it.
come up, the more gadgets come
Yeah,
up.
yeah, and then in our house, because power keeps going off, often in Bangalore. So whenever the UPS kicks in, I'm like panicking and going around switching off all the devices, right? So that's your, trying to optimize for lower demand through the bottleneck as well. So yeah, I mean, I get it. The only solution for this is, look, it depends on whether you believe in abundance or not, right? So if you believe in abundance, then you should definitely push through the changes required to increase the efficiency and speed of these transactions, and just allow the marketplace to decide which is better and which is not, because most of these fads go away. So NFTs were the rage a couple of years ago, and it used to choke the ETH network as well. In fact, I think Solana was launched in order to reduce the load on the ETH network
Uh,
because of these NFT.
yeah, no. So what happened was Solana has an interesting technical innovation in this regard. So I can actually tell this to you from a computer science sense, and you will appreciate it. So Solana has what is called a local fee market. So what a local fee market is if you have one contract, like an NFT contract on Solana, and it has a lot of demand for minting new NFTs, you can increase the fees only for that particular contract. But the rest of the people who are transferring values or whatever in the side, they won't get affected by that. This is like, if there's a lot of demand for a cinema theater, the cinema theater fees goes up, but the neighboring mall doesn't have a stampede or whatever, right? In Ethereum, what happens is the cinema people are also standing in the mall to watch the movie. So everybody gets crowded out by the cinema people. So
Right.
I was wondering how they would do that. Like, let's say you get a transaction from the you're a node and you're getting a transaction in data form. How do you know that this transaction will hit this particular smart contract, right? Because you have to actually run it before you put the fees on. And when you run it, you're already running it. So you kind of have this paradox there. So what Solana does is, when you call a transaction, you have to declare every resource you will hit in the function call. And if the function call doesn't hit the resource you claim it does, or rather, if it hits a resource that you have not accounted for upfront, the transaction will fail. So users have an incentive to exactly specify that they're going to hit contract A, contract B, contract C. And if you hit a contract D, which is not specified in the transaction, the entire transaction will fail. So you can build this localized fee markets using this particular notion. And that made Solana a lot more scalable than Ethereum, because Ethereum now kind of cannot do this because it's a fundamentally incompatible idea with their current computer science execution model. Because their function calls, you have to change, you have to make it fully backwards incompatible. And that will be like very big change, because you have to, all the contracts have to change, all the associated infrastructure has to change. It's a huge mess. So this idea of upfront specifying the state that you're going to touch is an interesting innovation from a computer science sense. So I like that. And many new blockchains that are coming up, Aptos, Sui, Monad, they all do the same thing. And Doing that also has an advantage that they can parallelize transactions. You know that this transaction will not touch this state, so you can run them together. So Ethereum can't do that. Ethereum has to pipeline everything and cannot do speculative execution, cannot do parallel execution. So it has all these other bottlenecks that come about because you don't know upfront what state is going to be touched. And that is an interesting computer science angle to the whole thing.
Interesting. All right, so I think we are nearing the end of our segment here. So anything, you mentioned technology does not matter. What is that? It's like a bold statement. So
yeah, this is a rant from the trenches of crypto. So the rant from the trenches of crypto is that a lot of the crypto short-term moves are based on memes, narratives, trolling, promises, without really the underlying technology having any sort of say in it. So what I mean by that is, in a traditional market, you look at earnings and then you look at the price and you decide at some level that is the earnings worth the price, because the earnings are coming from some cash flow somewhere, right? There's something happening. You're either selling advertising as a Google, or you're building Gillette razors, or you're building Coca-Cola, whatever. There's some earnings somewhere. In crypto, the earnings are vague at best and absent for the most part. And the earnings are sometimes rehypothecated. So the earnings of A will be the earnings of B as well, and earnings of C as well. But they all look like different because they are priced in different assets or whatever. There is some obfuscation going on. So the earnings are kind of completely irrelevant. So what you have is, you have to look at, okay, what is the promise of the earning? And the promise of the earning, you believe it's going to be because of superior technology. But typically it's not. It's typically whether you can sell, whether you can build up the hype around the price, and then the price goes high enough, and eventually you dump the token, and then you are good to go. So the technology has to be sexy enough to get that hype going, but doesn't have to work really. So I'll give you an example. So there is and I might be putting myself out there in the limb here. I'll anyway do it. There is a Twitter account called Satoshi VM. It's some account. It doesn't really matter, right? So it says they are going to do a zero knowledge based EVM equivalent on Bitcoin. I'll explain to you what that means. What that means is, on Bitcoin, you will be able to execute an arbitrary smart contract, and you will be able to prove that this smart contract works, and Bitcoin will be able to verify it for you. So basically, Bitcoin can verify that I paid you money. So I pay 1 Bitcoin to you. Bitcoin will say that, okay, this actually happened, and it will believe it. And the next person can be sure that you can pay him, because Bitcoin has said that you own the money now. But if I say that I have paid you some derivative and I have done some smart contract logic, Bitcoin doesn't know that. Bitcoin doesn't even have that feature. So this guy says that they can do it, and I'm like, okay, so where in here the token and whatever, right? So I'm like, okay, how do you do it? Where is the smart contract? Where is the code? Show me this code. I go down, deep down, there is a white paper. You read the white paper. The white paper has got, eventually there's some junk, as in it doesn't even read coherently. Then you look for the code. The code is just shells basically. There'll be like method stubs. They're not even written out. So it's just there. And then the token is going to the moon. I'm like, at least have something which looks like it might work, right? So I would say the range between people making things work all the way. Like, for example, there is a guy called Srinath Shetty in Microsoft Labs. He's considered to be the guru of this notion, this idea of zero knowledge proofs. He's the world authority on it, right? He's like top-notch researcher. He is not connected to cryptocurrencies at all. He's building this technology in Microsoft Labs, where, just eating sambar for lunch, and just normal guy, right? And then from here onwards, the things start percolating, right? Then there is some guy who takes this technology and says, I'll make it work for a blockchain. That might be somewhat legit, right? And then there's this guy says, I know about this technology. I will get some expert to build it for me. And the expert might or might not work, right? All the way down to the other guy who doesn't even care, right? He just wants the token mooning. So I see the whole. I'm of course excited about the first one the most, because it's real technology, real progress, real groundbreaking stuff, right? Like Srinath S is like an amazing guy. You should look him up. He's like a very soft-spoken, normal guy, but his papers are like have changed the world in some sense, at least in our small world here. And then all the way down to the Satoshi VM guy, who is completely bogus idiot, right? I mean, so I sometimes when I'm on this side, I'm happy and I'm like excited about this space. And so once in a while, I'm in this space and I'm like, oh my god, what the fuck is going on here? So that's my rant.
Yeah, makes sense. Makes sense. I think we've been discussing this from the first
From the
crypto
get
night
go,
as well.
from the first
Yeah,
get.
from
Yeah,
the
yeah, I
get
know,
go.
I know, I know.
And once you kind of open the floodgates, right? So all sorts of you got to be ready for all sorts of stuff to flow through it. So and at some sense you got to like depend on on the armed janta to kind of grow a pair of brains to understand what they're doing and deal with their money safely. So um, I can't really protect everybody from this. And if you really tighten the screws, Dr. Shetty also could not exist. So
Exactly. It's a
hopefully,
subtle balance. Yeah.
yeah. So hopefully, we'll figure out what this balance is sooner rather than later. So we'll wrap this up with this.
All right. Take care,
Thanks, Dr.
everybody. Yeah.
We'll see you again next month.
All right.